Nina, thank you so much for joining us here at Super Return International.
Thank you so much for having me.
You're here talking about thematic investing to a certain extent. Talk to me about that and why that's a strategy that you see as appropriate for the climate we're in.
Yeah, so that's a great question. What we've started to see in both dialogues with our clients and prospects is increasing focus around thematic investing and specifically around sustainable investing, impact investing, through a specific and bespoke lens tailored to the goals of their board and the goals of their organizations. And so to do this, I think it's important to be here at Super Return, talking to people, understanding the opportunities out there and how they align with different thematic investment capital that we're managing today, and then looking forward what the appetite is for the future.
And Nina, I think you're quite keen to see the E and the S and the G as quite separate components, each with their opportunities to offer.
Exactly. I think looking at ESG as one concept creates challenges when assessing ESG as a risk management tool or looking at it perhaps from a value creation mechanism. You have to compartmentalize, divide it into its subcomponents, and think about materiality across every investment that you're making. I think that ESG and sustainability and impact are all very different. ESG for Hamilton Lane sits across everything that we do as a risk management framework. Sustainability, we look at as being aligned on a measurable basis on either a primary, secondary, or transition basis to a United Nations Sustainable Development Goal. And when we look at impact, impact needs to be inherent and embedded and mission-driven into the assets we're investing in. So 3 very different topics. Where we see thematic investing coming about is within the sustainable and the impact programs. And we like to view this more as a sliding scale where investors can select what they want to see exposure to and how they want to get that exposure in their portfolios.
So it's both about sort of value creation and mitigating for any kind of risk. So they're 2 very separate things in terms of ESG and what they can do. That's quite different to what we were talking about, say, 5 to 7 years ago in terms of ESG, where it was just seen as risk management, wasn't it?
I think it comes about when you break it into its components. Let's take an example around talent strategy. And let's look around today. I mean, we see so many experienced, talented individuals doing business with each other at Super Return. And in people-driven businesses and service industries, people are critical to success. And so when we think about the S, great talent strategy doesn't happen by accident. And it's value accretive over the long run for businesses that implement talent strategy. Now, you can look at that as a risk mitigant, but it's also, especially when the ecosystem changes, the environment changes, it can be critical to success. And so that's where I would say breaking it apart into its components, looking at materiality, that's where you start to see the value creation capabilities. But itself as an umbrella term wouldn't naturally lend itself that direction. It's much more of a risk framework first.
It sounds to me like you have a very clear strategy when it comes to how you implement good ESG and what it offers and what it gives. So you're looking for that in any of the portfolio companies that you're involved with. You're looking for that sort of resilience in them.
We are. So at Hamilton Lane, across everything that we look at from an investment perspective, we're doing environmental, social, and governance due diligence, as well as discussing critical situations with our responsible investment committee. And it's not just until the point of investment in either a fund or a transaction, we're monitoring the performance of those portfolios actively and assessing them against our responsible investment policies and the commitments we've made to our clients. And I think that's really important across any investment strategy, that from beginning to end, you're focusing on managing risk And then looking for those pockets of opportunity, again, when it's material and it's relevant to the financial performance of an asset.
There are 4,000 delegates at this conference. Is that a conversation that you're seeing all the best operators having? And is that a sort of a mutually accepted good practice, if you like?
You know, as we look across the conference, I would say everyone is on their own journey as it relates to thematic investing or implementing environmental social governance as part of their risk toolkit or their value creation toolkit. But what I would say I've seen over the past years in coming to the conference again and again is the rise of the discussion. And I think there's something great about bringing smart, experienced people together to have a positive discourse about where things are material, what matters, and how it hits the bottom line for investors.
Obviously, there were smaller firms who were kind of first operators in this space, and you talked there about how there is a sense of some sort of mass adoption of this approach going on, and it is more widely accepted as necessary, if you like, and a key core part of the business's models going forward. So how does that change the space for those original small operators? Are they being crowded out, or are they still there being a key part because of the experience they have?
We're in a competitive asset class, and competition is a positive for investors and beneficiaries of private markets. I would say those that succeed and continue to succeed continue to innovate, and they also know and recognize that having one part of a toolkit standing out is not necessarily forever, and it's also not the whole picture of driving great performance for investors. And so as we look across those that are really successful, what we see is an appreciation for the private equity and the private markets model, an appreciation for disciplined pricing, for great execution and great ownership, and ESG and or thematic investing, if you're choosing to productize your offerings that way, that's a way to deliver that, and it's a part of the component to drive great returns, but it's not the whole picture.
And being willing to innovate, as you said, this industry likes to sort of consider itself as the most flexible of the financial institutions, if you like, doesn't it?
Yeah, you need to innovate constantly. At Hamilton Lane, we continue to invest in our people. We continue to invest in our technology to deliver great solutions for our clients and for their ultimate beneficiaries. That's who we come to work for. And innovation is part of that. And competition keeps us on our toes and keeps us investing in our business to drive great returns.
You talked there about investing in your people and how important talent strategy is. Is that something that within your company you're very conscious of, and what sort of is important to you in terms of diversity of your workforce for that reason, and cognitive diversity too?
Absolutely. Diversity, equity, and inclusion is a huge component of what we think about. We've had a diversity, equity, and inclusion council for a long time, leading firm-wide strategy in conjunction with the executive team and human resources on talent strategy. And the way we like to describe it at Hamilton Lane is amplifying diverse voices. Everybody has a voice. We just have to listen to the voices and make sure that we're hearing those voices, bringing them into the room, and encouraging a feeling of belonging. And that is never done. Our work is not done. The industry's work is not done on this topic. And I think as we move forward, there will be increased focus on inclusion, on belonging, because for too long we focused on only elements of diversity that you can see to measure. And that, as you say, with cognitive diversity, with veteran status, with socioeconomic background, that is not the whole picture of diversity. And we at Hamilton Lane want to make sure that everybody feels included in our organization so that we can genuinely attract and retain and develop great people to continue to deliver returns for our clients.
talking of talent, we've got 4,000 leading members of your industry here in Berlin. A great chance for you to have millions of conversations this week with clients and friends and colleagues. How much do you enjoy that, and how important is that?
Oh, it's a highlight of the year. I love coming to Berlin. I love that it's warm and sunny probably this week. And it's always great to have intellectual debate, conversations about how we can get better as an industry and where the industry itself is going. And I think there are a lot of topics today that people are really digging into and having robust discussions on. And it's an absolute pleasure to be here. And I don't mean to speak for everyone else, but I've seen and heard a lot of excitement around the conference.
It's great to have you here. We're excited to see you too, Nina. So thank you for joining us.
Thank you so much.